It's sad, but there really is no customer loyalty in the banking system. Chances are, if you've had your mortgage with the same lender for a few years, then you're probably not getting their best rate. Banks typically won't give you their best rate. You have to fight for it. And in order to win that fight, there's certain things that you need to know and certain things that you need to say. So in today's video, I'm going to give you the tools that you need in order to win that fight. Hello guys, Brad here from The Guided Investor. Welcome back to the channel for another video. If you're new here, consider hitting that subscribe button because I post regular videos about how you can do more with your money. And today we are talking about how to hustle your bank for a better rate on your mortgage. Now, before you jump on the phone with your guns blazing, there's a few things that you need to understand. Firstly, your mortgage must be a variable rate. Now, if you've got a fixed rate home loan, then you've got fat chance of getting a better rate because at the end of the day, that's what you signed up for. You signed up for a fixed term with a fixed rate, and you're not going to be able to negotiate a better rate until your fixed term has expired. Next, walking into this fight, you're gonna want to know what your loan to value ratio or LVR is on your property. Your LVR is a ratio of the value of the loan to the value of your house. Now, to calculate this, you simply divide your loan balance by the current market value of your house and multiply it by 100 to get a percentage. You're going to be in the best position to negotiate if your LVR is below 80%. This is basically the magic number that banks look for to see you as a low risk client. If your LVR is above 80%, then you're considered a high risk client. And as a high risk client, you're going to get a higher interest rate. Also, the lender knows that the likelihood of you refinancing to another lender is quite slim because if you do so, you're likely to incur lender's mortgage insurance, which is an additional expense, and 9 out of 10 times this expense will make the switch to a lower interest rate redundant. So it's not impossible to negotiate a better interest rate if your LVR is above 80%, but you're really not in a strong position to be negotiating. But regardless of that, feel free to have a crack anyway. And finally, you need to know what a good rate is in the current market. And to do this, good old Google has your back. Simply go to Google, type in best mortgage rates, and a number of comparison sites will come up for your perusal. Just for your information, as at the time of putting this together, which is November of 2020, a good rate on a sub 80% LVR loan is around 2.7%. Now, obviously fixed rates are much lower than that at the moment, but fixed rates are a whole new kettle of fish and there's a lot more implications that you have to take into consideration there, which I'm not going to get into in this video. Armed with your new knowledge of interest rates and LVRs, you can now get on the phone to your lender. To get the conversation started, you can simply say something along the lines of, "Hi, I've been doing some research on mortgage interest rates and I believe I'm paying too much. Can you please review my current rate?" With any luck, this is all you'll need to ask in order to get your rate reviewed. If the person on the other side of the phone is feeling helpful, this should get the process started and the ball rolling to have a look at your rate. However, if you get some resistance, then you're gonna need to push a little bit harder. Sometimes lenders won't put their best foot forward and you need to push them in order to do so. And now by pushing them, I don't mean yelling and screaming at them because that's gonna get you nowhere. What I do mean is showing them that you mean business. And there is one line that does that better than any other. Can you please send me your mortgage discharge form? A mortgage discharge form is your instruction to pay out the existing home loan and remove the lender from the title of your property. Now, by requesting this form, it shows the lender that A, you know what you're talking about, B, you've done your research, and C, you're on the verge of refinancing. If this doesn't get you a better rate on your mortgage, then chances are you're not going to get one with your existing lender. And at that point, you really do need to seriously consider refinancing if you think there's a better deal out there. However, there are costs that come with refinancing and implications of refinancing that you need to take into consideration first. So make sure you weigh up the costs versus the benefits So the payback period of refinancing is quite short. Now, if you took your loan out through a mortgage broker, then this whole process is a lot easier because the mortgage broker can do the heavy lifting for you. Simply get on the phone to your broker, ask them to review your rate, and they will get in touch with the lender on your behalf and do the hard work and have the hard conversation on your behalf. But that's it for me today, guys. Thanks a lot for watching this video. I hope this does help you get a better interest rate on your mortgage. And it's amazing the benefit you can get from asking just a simple question. This really is low-hanging fruit in order to help improve your financial position. And one last thing I will say before I go is that if you do manage to get a better interest rate on your mortgage, then keep your repayments the same. Because if you keep your repayments the same, more is going to go off the principal, which is going to accelerate the debt repayment, and you're going to be debt-free a lot quicker.